this is Pat Walker at MissionWinners.com. Doing some housekeeping here before we head out. Making a short video here from Mike. Mike has a good question. He asked, and this is for everybody, but I think it's a very relevant question. Hey, Pat, why do you think Amazon and Google are gap up candidates? And I'll share why. And by the way, I don't know the future. Nobody does, and I'm well aware of that. I just get in line with what is. Google and Amazon are max list stocks. They are anointed big companies that when the market's moving, these stocks move. Big money can move into these stocks without causing much of a ripple. So here we're looking at Google, and you can see where it gapped down and it closed near the highs of the day, which is what we want to see, and it's above the rising 8-day. Their 8 days starting to curl up. Volume was just okay, but this is a stock that has a tendency of gapping. This was an earnings gap. This wasn't. This wasn't. You go back in time and you can see right here, nice gap. Right here was a gap. This stock has a tendency, once it starts going, to gap. To gap. Didn't have a gap, had a little gap here. But it can have gaps in it that we look for. That is exactly why it's on the max list. It's a huge name, big institutional stock that money can pent up demand, can push it up in price at the open. Here's the next one, Amazon. Amazon, similar setup. Look at this. Google right above the 8-day. Amazon bouncing up through the 8-day above the 20-day. Now this one has a slight pickup in volume. This stock we made hundreds of points on this stock this year. This stock has a tendency to gap. Now, does it work every time? Nothing works every time. There's a gap here, here's a gap here, here's a gap here. You go back and just look in time, small gap here, small gap here, gap here. You can say, well, that's not much of a gap. Well, it closed this day at 1665.27, and it opened the next day at 1672.99. Last time I checked, that's 7 points right there. 7 points right there. And again, this stock, when it starts to move, has tendencies to gap. That's why we're in it. There you go. Those are the two that I recommended. Now, I have to be honest. I'm not in it, and here's why. As you know, disclosure. I'm leaving town early tomorrow morning, traveling early. So, at like 4:30, I won't be connected to manage these things. Believe me, if I was, I would do them. I will never, ever recommend any stock. Morally, I can't. It's just part of my foundations. Morally, I can't. That I can't buy myself. I can't do it. It would be wrong. So, both of these look good though. Both of them. Here's Amazon again. That's Baba. There's nothing there. If I can click on the right ticker. There you go. There's Amazon again. And over here is Google again. Both of them. Tendencies to gap. So we'll see what happens tomorrow. And to clarify, you know what to do. Sell some into strength if you get a big gap up. Don't think, oh, this is the beginning of a massive move. Take some off to know that you made money. So good question, Michael, and I hope that answers it, and I thank you.